Hi, Randy. How you doing?
All right, Craig, we got you in.
Hey, Craig, we
Awesome.
got
Here.
Craig Squared going.
All right. You can hear me and I'm clear.
Yes, you are
All
clear.
right.
It looks like we are recording, but we'll wait a minute or so for people to roll in. But yeah, so we have, just so you know, Craig, like we do this weekly. We have uh, you know, anywhere between 5 to sometimes 10 panelists, and we cover different topics, and um, not everyone gets to share necessarily if we run out of time, but we try to go around the horn and kind of get everyone's input because everybody on the panel is a top producer in their own city and state that they serve in. So these are realtors all over the country that are joining us at this panel. A lot of them are with us at EXP, but we don't make it exclusive to EXP agents. We do open it up to other agents as well. So we're excited to have you, man, to
Great. Glad to be here.
share share on this topic. We covered assumptions kind of 101 about a month ago. So I kind of I would say I was, I kind of took control of that, but mainly because, as you know, there's a lot of misconceptions around it. It is a fairly new niche, even though I know it's been around now for, I mean, it's been around forever. It's just that it's become a very interesting niche in the last, I would say, couple of years. But realtors really getting into it, most recently within the last year, and then companies forming around this niche within the last year, and you're one of them. Um, so yeah, that's kind of how Craig and I met actually a few months ago, and I'm excited to have you here, man. You're the founder of Assumption Solutions, but you are also an experienced realtor, right? You're on a team in Colorado, is that right?
Yeah, I have actually been a realtor since I was a 19-year-old kid. October 95 was when I got my license. Mostly because I had joined the United States Army and their training schedule kept me from starting college because I was a reservist. And my father, he was kind of a commercial broker, and he was like, "Oh, you could get a license." And I was like, "Oh, I never thought about that." Okay. Back then, it was pretty easy. It was like 12 days, and and I got a license, and I got hooked pretty quick. And I'm sure, like many of you, I'm in it for the long haul. And I've spent, gosh, we're based in Colorado Springs, which we have a lot of Army and Air Force. Matter of fact, it's either today or tomorrow is the United States Air Force graduation. So if you hear jets flying over my office, it's the Thunderbirds practicing. But I've spent a lot of time sitting at closing tables with VA buyers, and when the topic of the assumable nature of the VA loan would come up, I always made the comment to my clients that if we ever found ourselves in a rising rate climate, they'd have a special asset.
Mm,
I just didn't think it would take 20 plus years to get back to that. I mean, really, we've kind of been in a slowly declining or flat rate climate for over 20 years, but 2022 came along and the writing was on the wall. We got as low as you could possibly get, I think, down
yeah.
in the low twos. Matter of fact, we've seen some rates that we've processed that were actually 1.75%, which is shocking to me. So, yeah, so 2022, I sat down with a friend and partner who owns the largest title company in Colorado Springs, and we said, "Hey, there's an opportunity here. Let's see if we can help people navigate the assumption process." And
Yep.
Assumption Solutions was born. So,
Amazing. And to my understanding, and I'm pretty now well connected in the space, because I do, I co-run a Facebook group that you are obviously aware of, right? That is around this whole topic of assumptions for our VA military community. We have 3,600 members there now. So it's a very lively group of people that are looking in this marketplace, either assume a loan or sell a property that they have with an assumable loan. And a lot of them want to bless the other VA buyer, right? They want that loan to keep on living, right? Past their ownership of it, right? Of the sale of the property. So it's kind of cool to see that loyalty, right? And within the military community. But now, as we were getting ready to do this today, you mentioned like now you've processed hundreds of these, right? You're probably the first and largest as of right now in terms of processing. Is that a fair statement right now, or how do you?
I think so. It's difficult to track, right? I mean,
Yeah.
it's not like your sale records go in an MLS system or something like that. But I would assume we're one of the largest because we're one of the first. I think what helps us is being that our company is founded by people who are invested in seeing realtors do well. We approach everything we do with the idea of how do we make agents more successful in a cost efficient and beneficial way. I think our biggest competitor, I'm not so certain they didn't get the idea from me after I did a podcast on Bigger Pockets, but they're founded and funded by people who backed Open Door. And I don't think Open Door is a generally a company that has the best interest of real estate agents in mind. And with what they charge compared to what we charge, I think it's a no-brainer to use us versus the other behemoth in the space. So
Yeah, and I mean, I can say it. It's with Rome is one company that's out there that's backed by like venture capital and was
mhm.
born out of Silicon Valley. Let's put it that way. So, uh, and I'm talking to them about different things just to see what they do. But honestly, it was a pleasure to meet you a few months ago, and I always enjoyed our conversation. So I always refer you to my agent partners across the country when they have VA clients, especially with, of course, the assumption process or FHA, right? Because it's not like you only do VA, it's FHA as well. So I
Mhm.
don't want to talk about the basics today, because if you're on today and you missed the previous one we did on assumptions, uh, let's call it, assumptions part one, please go back and watch that, because a lot of the things we're going to talk about today are going to make a lot more sense for you, but we just don't want to repeat what we talked about then. So I just want to premise that. So if you're kind of lost about assumptions, maybe Google what it is first and kind of do your own research as we talk, because I want to go deeper today with Craig. And I'm excited too, because I have questions personally. I've some of I've referred now over 160 clients that are looking for assumable loans to agent partners across the country. So I'm constantly learning, and this niche is evolving. Okay, this is
Mhm.
something that I mentioned last time. I compare this to what happened in the short sale niche at the last crash, where on the beginning, a lot of agents were resisting getting into it, right? And then they had no choice because it was everywhere around them, right? If they didn't, they would be left behind. And I see this very similar, where it's starting to become a very common thing to see on the MLS, at least in San Diego, that I'm aware of, because I track all that. And in many other cities now across the country, when the market is slowing down, especially, and listing agents are struggling to sell their properties, they're going to start looking for opportunities to market their property. And there's no better way to market a property with a 3% interest rate, right? If they know that their seller has one, right? So first order of business, really, I would say for us, between you, Craig, myself, and our panelists, is I think that our biggest challenge is, someone told me a couple of months ago, I was speaking to someone about this whole topic, was it's the ignorance of realtors right now about this topic. So it's our job to educate the realtor community, because now if they are more elevated in this, then they can help more people and actually, create an American dream experience that you know, they probably can't even fathom when they look at interest rates today at 7%, right? That this could even happen. So anyway, so that's kind of the premise. So let me start with first question though. Can someone, so we're going to do a Q&A today, guys. We're not going to have Craig bore you with a slideshow. Okay. We're going to make this interactive. Okay. And I have a lot of questions that I emailed to Craig to prep him. I'm like, here's what I'm going to ask you. And If you have questions, please put them in a chat. We're going to try to get to everything as well. So first question, Craig, can someone assume a VA or FHA loan and not live in the property once they actually buy it?
So when we first started processing these, it was pretty much a hard no. Um, and like you said earlier, this is an evolving market. We have seen of what we've done, I think 2 deals go to non-owner occupants. But I think it's very servicer specific right now until we get some more clarity from like government agencies laying out guidelines. Truthfully, I think the government agencies are a little bit flummoxed as to what's going on in this world right now with assumptions. We had a high level conversation with someone at VA, and they were just shocked that this is going the way it is, because assumptions were never designed to be a really super attractive product. It was kind of something that was created kind of to stem losses way back in the day. So anyway, I think guidance will come out that might help with that. Right now, what we are hearing is that there are a few servicers who have said, specifically on VA, not on FHA. Nobody has said this on FHA yet. They have said they will allow a non-owner occupied purchaser as long as the entitlement is not released. It stays with the property, which makes it less attractive, right, to some sellers. So we still aren't doing those en masse. And speaking with my real estate agent hat on, right, if you're working with a buyer in this and you want to try and get whatever the buyer can get done. But if you're working with the seller in this situation, are you willing to put your seller in a little bit unproven, untested territory? Because these take longer, right? Now you can try and reach out to the servicers and ask questions, but here's what I hate to say about talking with servicers. When you call in, you talk to one person, it's a call center, they might give you one answer. If you call 30 minutes later, you talk to somebody else, they might give you a different answer, and so on and so forth. So if you're working with that seller and you put them in a deal where you're trying to do it as non-owner occupied, right, you could be tied in that deal for a while, and all of a sudden they just come out, even though somebody on the phone had said, yeah, we think we'll do it, and they don't do it. So we're not seeing it en masse yet, but it could happen.
Okay. So what I'm getting from this is that just be careful and be transparent with the seller that if they do take this type of a buyer, that a couple things might happen. One is that they might lose their entitlement, right? Or it might just get denied altogether for the buyer, potentially.
Yeah, I mean, so I think why it was early on, it was a hard no is honestly, servicers were looking for reasons to not do these.
Yeah.
Right. It's not profitable to them. If they could get that money and lend it out at a higher interest rate, I'm sure they would love to. And it's just a pain in their butt. We spent a lot of time when we first started kind of showing servicers who, believe it or not, were saying to people that, oh, we're just not going to do these. It's not an option, guys. This is a benefit of the loan, and you're responsible to get these processed. And so I think early on, they were definitely just looking at ways to be a pain in the butt and make it not there. I think that's also why, to some extent, we fought really long timelines in the process with servicers trying to make it inconvenient. We don't have to send it out much anymore, but early on, we had a letter we created that was basically outlining, the VA guideline, where it is, as how fast these are supposed to go, and then kind of pointing out, look, if you are not meeting these guidelines and you create situations where buyers or sellers lose money or lose a deal, who's liable for that? I kind of think you guys are. Do you want to get sued? Anyway, I could go on and on about that, but yeah, I think ultimately that it's going to come down to government agencies kind of firming up rules, if that makes sense.
So that's cool. So I'm going to jump around with my questions here because I actually want to piggyback on this. So you mentioned, so there's resistance, which again, same thing was happening with short sales back in the day, right? They didn't want to work them. Then they were forced to. Then there were rules that were created, right? And in this case, the Veterans Administration is there to protect their people, right? So they came out with that letter, the circular, which you mentioned, right? That is mandating that they process the uh the assumption within 45 days from the day they receive a complete package, right? Which that alone could take a while,
Right,
right?
which is just a reissue of the rule that's always existed.
Got it. Perfect. Okay, so what I'm hearing is what you like to do, and this is what I'm suggesting to my agent partners at least to do. When you submit your package, include that letter, just so they know you're aware, right? That this exists. Is that something you would recommend or not recommend, or just kind of keep it in your back pocket? Like sounds
It's
like you
it's pretty much it's not needed to submit that anymore. We did it early on with our submissions.
got it.
They all know about it now, right?
Okay.
The timeline is there. The definition of a complete package is where the
Got it.
ones who are slow are fighting, right? They're saying, if they come out and they say, oh, okay, well, this is complete, but we still need this condition, right? Is that
Yeah.
once that condition come in, is that the complete package? When does
Yeah.
that clock really start? And
Yeah.
yeah, teeth need to be sharpened at the government agencies to get them working in the direction they should be.
So then because I know you obviously have a company that will do the processing for you, which I highly, highly recommend to do when you're an agent, outsource that. That's what I did during short sale days. I outsourced that to an attorney back in the day that literally had a person just processing short sales for me in New Jersey when I was doing real estate. And I'm doing the same here with assumptions. I don't want to be the one calling the banks. I don't have the time. My time and your time as realtors is better spent creating these opportunities, right? So if you get to know Craig, right, one company you can look into, of course, right, and see if you want to use them. But what would be, if someone wants to tackle this on their own, right? Because I know many agents will want to be like, you know what, let me do that first one and just see how it is, right? Any tips of recommendation, like what would you recommend they should keep in mind when they contact the servicer? You kind of leaned into one already, like knowing that just be prepared that each time you call, you might talk to someone different, right? What other tips can you give us around contacting the servicer?
Um, all right, doing this, if I was going to do this without my company, which of course owning my company I would never recommend, but um, the first challenge that you face is having enough knowledge to say, is this deal going to have a high likelihood of success? Right. And now some people, what they'll do is they'll connect the buyer with their preferred lender, right? And the preferred lender might say, yeah, this person could get a loan in this market today. And people will then assume, well, then it should be a slam dunk to assume the loan at a lower rate. The challenge is when you get a new loan, like if you want to hear a lender brag, they will talk about how high they were able to get somebody's deal done with their DTI ratio above like 43%, right? You're kind of not able to really, the assumptions right now are holding you to the letter of the guidelines with VA. So while we've seen deals where a lender blessed it and they weren't wrong, but being that the guidelines are a little bit tighter, that deal wasn't going to get approved. The next piece is ensuring, let's say it's VA and you're going to swap entitlement, ensuring that there's sufficient entitlement to be swapped between the veterans if it's going veteran to veteran. Um, if if you don't know how to do that kind of stuff and you're just going to put the deal together and then you get the assumption packet and submit it to servicer, your package is going into a queue and you're waiting for them to look at it because they don't have a ton of staff and they've got a ton of deals on their desk and they're going to review it anywhere from a few weeks to a few months from when it was submitted, right? And so where I think we bridge that gap, that benefit that we bring is what takes them weeks or months, we're going to have done in days, as long as everything is submitted correctly. So nobody wants to be in deals or off the market for that whole period of time. You
Yeah.
wouldn't believe how many people discover us and then reach out to us when they're 2 months in and a problem has arisen and they're like, how can we fix this? And sometimes all we can say when we review it is, well, we would have helped you get out of that deal in 5 days. Sometimes we have fixed deals and said, well, no, okay, boom, bing, bang, boom, and fixed it. And you know, people have been able to close from there. So doing it yourself, I guess it's like as a real estate agent, it's almost like going into your first transaction when you're a brand new agent with no
Yeah.
broker or mentor behind you,
Yeah. That's
right?
well put.
We're
Yeah.
Yeah, we're that piece that's able to say, "Oh, no, this is what you want to do," or this is what you're thinking. I mean, I don't even have problems consulting people when they're in the offer phase, right? Calling me, talking about timelines and stuff like that, because we keep a running chart of different servicers and how long it took us to complete that deal with servicer. I can go back to when we started and see the trends of some of them getting better and some of them not moving at all.
Yeah.
So, we'll consult and at least give you a little idea on, what needs to go in your offer, what needs to be looked out for, stuff like that. So,
So so also what I gather is the agent, you just got to stay on top of it, right? Because otherwise that thing could sit there for weeks and no one touches it. And if you're not contacting them, how often do you contact, let's say, once the file is submitted, right? Like, how often do you contact the servicer to
yeah,
check
so
on it?
like when we take in a new file, we have basically a whole workflow that goes out. I mean, it's built to go out like 8 months. Ideally, none of them ever take 8 months, but um, once we get our initial stages are basically like vetting the file, right? Once we get past the vetting the file, the next stage is kind of submission. And once you get past submission, we try to connect with them once a week. But here's the truth, right? Like we'll reach out. Sometimes they're going to respond and sometimes they're not. The point from our perspective is just positive pressure, right? The more we contact, we know that hopefully they open the file and it goes to that next stage and that next stage and that next stage. But
Yeah.
you dealt with this in short sales, I'm sure. They're
Yep.
deliberately insulated. The good thing that we've gotten to at this point, though, is we've done so many with so many servicers that we have a lot of internal contacts at the servicers. And so we have people that work, the same files at that servicer every time we do it. Because what we'll do is we'll just reach out directly to them
Yep.
and rather than going through the phone tree chain.
Yeah.
Um, and that helps. And we've gotten to the point with some servicers where they've even given us a recommendation because they've said, we wish everybody went through you guys because they want to get through these as fast as they can because they're not profitable. And so if they get a file from us and they know it's kind of been vetted, it's easier, right? They don't have to worry about communicating with a seller or an agent who really doesn't understand their language or understand the process at all and
Yeah.
is kind of confused, right? And so there are some servicers that love it. There are some that are sometimes donkey-legged with us, and we say these are team efforts, right? We're going to be contacting them for sure, but sometimes we got to enlist that buyer. Sometimes we got to enlist that seller. Sometimes we got to list that agent. I mean, we're all there to get through the finish line as fast as we can.
Man, this just I can't say it enough. Like this literally reminds me of what I was doing with short sales. Like I had to get my seller to call the bank and just talk about their hardship once again because maybe they didn't read the letter that they wrote, right? And threaten with bankruptcy if they don't move. Like it's literally the same exact thing, just different scripts.
My partner started a company, Short Sales Solutions, in 2008. It was
Yeah.
just focused in Colorado Springs to grow his title company. He had started what became the biggest title company out here, I think, in 2002. And when the market kind of shifted, he was pretty innovative, and he created this inside the title company. I simply had the idea with the assumptions. I'm like, we can just adapt this,
Yeah,
and run with it. And because he already had a lot of systems, we just pivoted those. So, but
love
the
it.
the challenge that I didn't realize I would have, I thought I'd be marketing to the public and teaching the public. And like you said early on, I quickly realized this is what I needed to be doing. This is my audience. I needed to communicate with realtors and get them up to speed.
Yeah,
And one of the blessings of my partner, um, inside his title company, he has a training, continuing education company, which is used by every company in Colorado Springs. It's ubiquitous. And so we did so much training there in our local market of Colorado Springs that it quickly spread in Colorado Springs. And I think we are now the most robust assumption market in the nation, because every agent and every company knows about these. And when you know about these, it's like the MLS, right? Like when people understand how to find property and put deals together, the
yeah,
agents come together and more deals happen.
yeah, totally, man. Yeah, and then so you answered actually a couple of my questions, which was, once you have direct contacts, does it make things easier? Which you said yes, and I understand that very well. Again, from short sale days, when I was contacting this same servicer, I'm like, yes, I have someone there. I hope she still works there, right? Because it
That
can.
and that's the key. They do trade staff.
Yeah.
That's why we still never, even though we have timeline tracking, we can't guarantee you. What if they get 100 assumptions in a day and they fire two people? So you never know.
Yeah. So are you seeing that servicers are improving their internal systems slowly? Because again, like with short sales, I remember we would submit a whole package via fax back then, right? Which was crazy to think. Then they finally, a year later or two, came up with a portal, right? Where we would upload it to Equator. Like, what is happening in this world of assumptions and the servicers?
Well, that's funny. It's funny you bring that up. Yeah, the first thing I had to do was get a fax line. Because
Really?
we had all this secure email stuff set up and ready to go. I mean, we clients upload their stuff into a secure portal for us, and we could share the link. They could go directly to it. And nope, they couldn't do it. So I got a fax line, and within the first 3 months, the fax company called me and was like, "Are you guys some kind of scam? What's going on here? You've exceeded your yearly allotment of faxes in 3 months." And we're like, okay, we didn't know we had a cap. Isn't that your
Wow.
business model to send faxes? But I mean, I don't know. It makes me laugh because I'm like, is it really more secure? Because I got to upload it online to a fax portal. It's not a machine, and then that goes to your online portal. It is there. We just had our first servicer basically have an email submission recently. So to me, yes, that's a sign that hopefully things are getting better. But a lot of them are different. There's different processes for a lot of them. One might actually do a ton of stuff over the phone in terms of almost like an interview for submission. One will mail the packet, and they have to mail it. I mean, that's the only way to get it.
Wow.
One will fax, obviously. They're all over the board, but yeah, these systems are growing and shaping. And I fully expect within the next year and a half that it'll be more streamlined.
So when you mail a package, and if you're processing the file, are your office mailing it on behalf of the agents and the clients, or the who?
No, sometimes it's got to be mailed directly from the client, because I mean, we work in all 50 states, right? So we're in Colorado. Very rarely are people meeting with us face to face.
Yeah,
Sometimes they can upload to us, and we can mail that on behalf of them. But a lot of times they've got to get something notarized, maybe, or something, just sent out in a certain timely manner. So sometimes the clients are mailing it. Mailing it back into them is the rare way. It's more when they need to send something out from the servicer to either the buyer or the seller, they're usually having to mail something on their end. I would say maybe 5% of what we deal with, somebody's mailing something.
Okay, got it. Okay, cool. And then so what else did I want? I mean, I'm just looking at my questions. Are there servicers off top of your mind that you can say are easier to work with as of now? Again, this could change, right? Some can become harder, some become easier, but as of today, any servicers that you were like, yeah, these guys are pretty cool to work with under the circumstances, obviously, that it's still not that fun, right?
Yeah,
Either way.
sure. My favorites are probably New Res and PennyMac.
Okay.
Um, yeah, we have great relationships internally. Both have praised us. Both are usually 60 days max at this point with what we're dealing with. There are other good ones. I mean, the bad ones, their reputation is kind of spread. I don't really have to spread it too much. I mean, Freedom is still difficult. Um,
Carrington, I have one with Carrington that I'll be listing.
yeah, they're not the worst, but they're not the best. I'll put them in the kind of in the middle a little bit. Um, there's a lot of people will say they have on their statement, I think it's Loan Care or Lakeview. But the key with if you see Lakeview, Lakeview has a multiple sub-servicers. And so depending on who the sub-servicer is, there's a variation between how good they are. So it's hard for me to say if and when somebody just says Lakeview, if which one it'll be, because some are better than others. Um,
Got it.
Occasionally we'll see smaller ones like credit unions that are very quick, like sub 45 days.
Really?
Um,
Huh.
Sometimes, yeah. But you never know. You never know. And sometimes those really small ones too, they're so oblivious to this. They haven't done one even so far yet. They don't even know it's a thing. And so sometimes, they need it's an extra push for us.
Got it. Okay.
But
Fair
all in
enough.
all, the trend when I go through my chart is okay, that they started at 132 or 145 or 190 days. Now they're at 75. Now they're at 65, so.
Yep, that's how you rate them eventually.
Mhm.
Okay. What not to do? Is there anything you would say that we should not do when processing an assumption, regardless if we work with you or are on our own, right? That can potentially create delays and or completely deny the whole package, or any tips there?
Well, the biggest no-no I try to teach people is guaranteeing somebody a timeline. Um, I think there are companies out there trying to do it, but I don't know how they're going to do that. Um, Unless they are finding out who the servicer is and then giving oh, we guarantee you we'll get you done in 90 days, and that servicer is obviously hitting 60, right? But I've been in real estate long enough to know that guarantees are just a bad idea no matter what you're doing because things change. Servicers who are doing well can get overwhelmed. And so the worst thing an agent can do when talking to their client is mismanaging the expectations on how fast the process is going to go. It's better to under promise and over deliver. So if you say, look, can you be in this deal for 90 days at minimum, right? I think that's a great place to start. With the idea that if it goes beyond 90 days, can we wait longer? Can we keep holding off to get this done? Like, when you're working with a buyer, if that's a question in the seller's mind, how do you make it worth their time? How do you keep them in the deal?
Yeah.
Money talks. Um, Other things that can go wrong, I would say, really, it's not that different from your regular transaction at the end of the day. you're just not getting a new loan, but you're being vetted in a similar way, right? So that process takes longer, but you're running your transaction, like your inspections, your title work. You don't need an appraisal. Um, but the rest of your stuff, and every state's got little quirks to it. I've learned a lot by looking at different state contracts versus Colorado. But by and large, it's mostly working the same. You just got to be a little bit patient.
Yeah. And I had one of my agents contact you. Well, I think she did, but or maybe the listing agent did recently because we submitted an offer on their property with the ability of our client to assume their loan, which was like a perfect opportunity. But their concern was that the VA seller is also concurrently wants to later buy within 3 months period.
Mm-hmm.
And then we run into the whole question mark, how soon will that entitlement be released in order for him or her to buy 2 or 3 months down the road? Like, can you speak to that? Because I think that's where a lot of us could get caught, right?
Yeah, this is another area that needs improvement because the servicer from the time of closing has 45 days to basically send in what's needed to the VA, basically processing the release or the swap, right? Because it's only releasing if you swap between VA clients.
And yeah,
And then the VA has another 30 days to basically process that in their system. So you're talking 75 days of potential limbo versus, you're doing a new loan, you sell your home and pay off the old loan, you can close the same hour practically. You just have to show the settlement statement. I think that's going to improve because um, it doesn't really make sense. I mean, if you can show a settlement statement that
yeah,
this is what happened, and there's a letter that talks about the entitlement swapping. Yeah, but it doesn't work that way yet. So we tell people, look, yeah, your best bet is to have patience. And it's not something we as a company can actually even help the seller with. We
mm,
recommend that the seller just becomes a pest to their servicer and is like, look, I need this sent out to the VA. I need this sent out to the VA. Is that going to guarantee that they are going to beat that 45-day timeline that they have? No, but I would definitely be on the phone. I think it's just better to plan. Okay, all right. Well, I'm going to be in a situation where I can't do this for a while. So,
yeah,
um, but
yeah.
yeah,
It's a
that
tough
is
one.
that
This
is a
they might
sticky
not.
point for sure.
It's like they want to take our offer, but that's the one sticky point. And we're being transparent with the listing agent, like you said, like don't overpromise, right? Like that, because we don't want that to come back at us later. So I wanted to bring that up for you guys to keep that in mind when that happens with VA transactions. And then as far as if the servicer charge, I know they don't make any money really. I mean, but there is a charge that they charge. What is VA or FHA type fees that they charge when they do an assumption? And is that increasing? Do you see that increasing anytime soon as well?
So there is some difference between servicer charge and VA charge. On a VA deal, VA does collect a 0.5% funding fee,
Got
unless the buying veteran has a qualified disability that can waive it. So there is a 0.5% charge to the buyer. Um, what we have commonly seen charged by the servicer has averaged $300. But I believe they just came out because the servicers are their big gripe is we don't make any money doing this.
Yeah,
And there's a lot of this going on. And there is a push to take that, I think, up as high as 1,500 to the servicers, basically to cover their costs to get them through doing this, essentially. And so I think it's a good idea just to prep people at the 1,500 mark at a minimum at this point. I don't think it's I don't think we've seen one close at that, but at any given moment, we're running approximately 65 plus of these.
Right.
And we're going to be watching to see if those start coming through. Now, keep in mind, we're actually not involved in the closing piece. Our role sort of ends once the servicer issues approval and clear to close. That's actually when we invoice out to the clients because we can't control at the end of the day if the buyers and the sellers still close.
Yeah.
So we're not on the settlement statement. We don't see those kinds of things, but we are keeping an eye on it and talking to people to see what changes from what we have seen. Because early on, yeah, it was very commonly that they were only paying out $300 to the servicer.
Got it. And I'll piggyback on something you said. So just so you guys know, so I kind of like the way you set this up, Craig. When you submit a package to Craig, or when you engage with Craig's company, he collects $50 from each side to get it started, right? The buyer and the seller. And then the other 700 from each side is due once he gets the full package approved, right?
Correct. Yeah.
Which,
So
like,
750 per side or 1,500 per house we work on if you want to look at that way. It's
yeah,
generally split between the buyer and the seller, but it can be paid by the buyer. It can be paid by the seller. We've seen both. And sometimes we
yep,
see agents in there, right? You just have to delineate to us who you want us to invoice. But we
yep.
think it's low cost versus benefit, right? Because yeah, $50 for us on each side is basically our vetting fee, right? And once a deal passes our vetting, the only thing that kill the deal usually is like something goes wrong, say in the inspection, or something of that nature. And then the next piece where things we see deals fall apart is as much as we teach how long this process can take, it's almost like people don't believe us, right? And they think, oh, I'm going to be done with this in 45 days or I'm going to be 60 days, and they could be 10 days from getting approval. You never know. And they're like, I just can't wait any longer. And they're not willing to extend. And that's why I always teach to people like, have this conversation with both sides of the transaction, communicating like, literally, how long can you wait? And then what if you can't wait longer, but we want to stay in this deal, what needs to be done? Like, could we pay you more for the house? Or I have seen more buyer rent to close situations than I ever have in my career through this
Mm,
because the
got
seller's got to get on, or maybe they've even already moved out of the house and it would be nice to have somebody covering the expense in there. And the buyer's got past us vetting it, past inspection, past title work, and it's basically just waiting on the processor, right? And so they jump in there and they rent it to close, and finally the deal gets done. So, but
got
yeah,
it.
if it falls apart, they don't owe us anything else. They've only paid us the $50 per side.
Got it. Perfect. Yeah, I like the way you have it set up. Now let's talk about the biggest, one of the biggest challengers, right? Is the gap funding. I mentioned that a month ago or so, which is the difference between the purchase price and the loan amount that's being assumed, right? Which in some states slash cities could be very high, like San Diego. Those amounts can be, hundreds of thousands of dollars, right? Um, Regardless, it is very, very difficult, and I've been searching to find a secondary lender that is able to provide that type of a loan program, especially on VA type transactions that we are doing an assumption on, because a lot of times the servicer is requiring for that secondary mortgage to be also assumable, right? And as of right now, I haven't found one reputable national company that can do that. Right? I've heard of a few little local ones that maybe have done it, but have you seen and processed? Well, I guess you don't do the closing, but I'm just wondering.
Yeah, but we would know up front. That's part of our vetting, right?
Betting,
Like one of the
okay,
main things we're looking at and when we vet a file is what is the plan for the gap,
got it. Okay, so
right?
speak to that. Like, have you seen any close actually with and got
We
approved?
we haven't done one. No. And we have had dozens of lending institutions come at us and say, we've got X, Y, and Z. Um, we have had servicers say they won't allow it, and we have had some servicers start to say they will. But what you mentioned just a second ago is I guess I can only put it in the rumor stage that VA, if that's going to happen, is going to want to see that assumable. None of the lending institutions that come at us have said that the second is assumable, right?
Yeah.
So that's challenge one is getting over that hurdle. If you're a listing agent, somebody wants to do this. If you're a buying agent, you'd be like, "Oh, if it sticks, it sticks," you know. But as a
Yeah.
listing agent, you want your seller in that deal. So that's challenge one. The second challenge there is obviously DTI, because if you do get a second right now, um, I think you're going to struggle to get it over 90% total LTV between the two. So you still got probably 10% in, and that second is probably in the 10 to 12% range,
Yeah.
right? So is the blended rate going to work with the DTI still? You still have a 10% equity down payment, and now you're going to have this higher DTI. So that's another wrinkle that is difficult to overcome. And then I mean, I am sure that the processing of all of that is going to be well beyond um, the normal timeline of the servicer is getting these done when the gap is brought in cash. And likely you'll even need an appraisal on those deals too, right? At least
Uh,
for the second too, right? So, you know, gaps are high around the country, commonly high. I'm shocked that, truthfully, I thought the market would have retreated in this high rate climate. I thought they would come down over time, but no, they're still high. But people are doing them left, right, and center. I mean, they're coming out of the woodwork. We're taking in anywhere from maybe on the low end 5 deals a week to as high as 20. And the average gap being filled is somewhere between 50 and 75,000 in cash.
got it. Yep.
Yeah.
Got it. Okay. That's good to know. So just so you know, I'm talking to a national company. I don't want to discuss the company right now, but they are considering launching a loan product where they would do the loan internally, right? Making it assumable with their investor that have big, deep pockets. And then after closing, selling or transferring that loan over to a non-assumable product, right? That the the market bears, right? So they will provide the funding for the gap, making assumable, and then a week later, they will basically transfer it to another servicing company for that second mortgage.
They'll
What do you
just
think?
they'll just sell the loan, but they won't change the terms, correct?
No, the new term will be non-assumable.
Okay.
That's what they're
Uh,
thinking. I want to
I
see what.
mean, uh, that's interesting to me. I mean, I could, I guess when I hear that, like, I wonder as soon as a regulator, like if the VA comes out and says, okay, this is fine, we'll allow these to happen, but we do want the seconds assumable. And then the VA hears that the terms change, like, I wouldn't want to be on the negative side of a government regulator, personally.
Yeah, yeah,
I,
yeah,
I
yeah,
don't
yeah.
I don't know. Look, there is a lot of people. There is a lot of people who are like trying to innovate in this space. A lot of
Yep.
lenders. I mean, this is this is a market with legs, right? I mean, the likelihood of us going below 3.5% again, I think, is very, very low. And so the amount of loans that have been done over the years that are VA and FHA making them assumable, and across the nation average at least 30%, right? That's not small, right? And so these have legs for a long time. These rates will be attractive for a long time. And heck, even if rates did go down, let's just say they did go down to 3.5%, in it still might make sense to do the assumption, because you got to remember you're assuming the loan with the term that's left. If
Yeah,
it's now a 15-year-old loan or a 10-year-old loan, a huge chunk of the interest has been paid already on that loan. I mean, one of
yeah,
my favorite deals we have processed was a loan that was 15 years old. The rate was 5 at the time and rates were 6. But it was 15 years old. The guy brought a $500,000 in when he sold a home in Hawaii. He actually bought the home just up the road from me. It was interesting. But I would do that deal all day long because, yeah, even at 5%, the amount of interest that he's going to be paying over the rest of that term, it's a great deal. That's what I'm
That's a
hunting
good point.
for if I ever move. So,
Yeah, that's a good point you bring up. It's easy to forget that it's not just the interest that gets transferred, right? It's the years left on that loan, which could be
mhm.
significant amount of savings, right, for that person.
I actually need to sit down and do some graphics on that because it's almost the better thing to focus on if you're in the home for the long term.
Yeah. Okay. Last question, and I know Brian raised his hand. So when someone has a listing, like I have a listing coming up, and I asked my client if it's an assumable loan, he sure said, "Yep, 3, I think, 1/4%." His servicer is Carrington, hence why I asked you about your thoughts on Carrington. And what would you recommend for someone like me, right, and other agents that are taking on listings, being aware that their seller has an assumable loan? What should I do to make your process and or my process easier as I get ready to list the property and market it?
Yeah, there's not a lot to do in advance, truthfully. You can contact the servicer. Some people reach out to the servicer to try and get the assumption packet. Some servicers won't even send it out unless you have a deal. And truthfully, a lot of the assumption packages we don't need to obtain from the servicer because we have. Um, our
Got
company really won't touch a file until you're under contract.
Okay, got
Just
it.
be just because that's really go time. Once you've come to a deal, that's really go time. From a real estate agent perspective in this market, I mean, I would love to just get listings that had the assumption because at the end of the day, I got an asset that I know is going to sell one way or the other in my real estate company. Either a buyer's going to come and assume that loan, or a buyer's going to come that's going to get a regular loan, or they're going to pay cash.
Yep,
Likely it's going to sell one or the other, right? So, working with buyers is great. I'm not knocking it. We need buyers agents and stuff. But sometimes the big challenge to match the buyer with the perfect assumption details and the perfect house details, that can be harder.
yep,
That they might have all the assumption details might work, but it's missing two bedrooms that they need.
yep,
Or, the house is perfect, but it's 20,000 over the gap money they have,
yep,
right? And so you and on your guys' side, I obviously I think it's just about learning how to properly market the property and expose what you have and what you're looking for. That Facebook group that we met through is a great place to post your clients' information, both what you're selling and wants and needs for your client. Because connecting as much as you can to the market that's there is the key to this sale.
yep.
Um, Properly managing your expectations. I mean, make sure it's a VA or FHA loan.
Yep.
O&E, I mean, if you've got a VA or FHA rider and case number on the deed of trust, you pretty much know you've got an assumable product there.
Okay.
Um,
Fair enough. I want
yeah.
to make sure we have 7 minutes left, and we usually want to always finish on time. Brian, go ahead. Sorry, I was hogging, but I had all these questions that I want to dive into. Go ahead, Brian.
Yeah, thanks, Randy. Hi, Craig. Hey, I
How
have
you
a
doing?
question. So I'm reminded, I got into the business in the late 80s. There was a lot of this going on. I cut my teeth on AITDs and assumptions and creative financing. And have you had a servicer yet offer the borrower at this point a new product for the solution to this issue? So I'm reminded in the early 90s when the Resolution Trust Company came in and just overtook a lot of these properties and things. One of the things we got really good at was putting together, instead of the assumption, we'd put the AITD together with there would be a due on sale clause. So we got very creative. But what I'm asking is have you had a servicer yet go back into what used to be, we used to call them the variable rate mortgages, where they would come up with a solution for a new loan for the borrower and say, hey, why are you guys doing this? Why don't we just put you in a variable? We'll take a 7%, we'll make it 4.5%, we'll do it for 2 or 3 years and give you time to refi out of this and then create a whole brand new product for that institution. Have you had any of those run parallel packages yet for a borrower?
I think the companies are working something along those lines. Obviously, you really, man, you really bring me back. Not many people know about the Resolution Trust Corporation, but I want to say it's coming. Some of the companies that I think are going to be on the forefront of stuff like that are like PennyMac. PennyMac was the first to say to us that they would allow secondary financing, and they would allow non-owner occupant situations, right? They're still not happening in mass, but you know, they're smart enough to say, well, okay, look how many of these we're processing. Look how many people are bringing in 100,000 plus, right? There's got to be a few of those or more of those people who would like to finance that some way. So as of right now, I'm going to say not yet, but the wheels are spinning inside these companies and they're going to figure something out.
So you're saying PennyMac is actually offering their own second mortgage if necessary?
Well, we haven't seen a deal with that product yet. Because I think between the time they said, yeah, we could probably figure something out, and then the VA saying, well, we'd like it to be assumable, I think they're kind of weighing the options. I mean, you know, you got to also keep in mind, you know, with the change that's happened economically, a lot of these companies are worried that an 08 like cycle could happen. And what happened in 08, 9, 10 was anybody in a second position was getting wiped, you know? Yeah. And so right now, I think they want to do it because like any company, they want to grow their bottom line. But at the same time, they're like, does the risk outweigh the benefit? When truthfully, the market is blowing up without the secondary financing. There are people bringing massive amounts of cash. The biggest gap we've seen filled is $1 million, $2 million house, $1 million loan assumed, $1 million assumption, or cash gap filled. So yeah, once again, I think everybody is looking for clarity in terms of economic direction. You know, how many of us are just simply still shocked that with rates more than doubling, tripling in some cases, that house values have gone up sometimes in markets.
Yeah.
So yeah.
Got it. All right, cool. Craig, can you put your company in the chat and make sure when you do, can you put to everyone in the to fields so it goes to everybody?
Yeah, I'll do this real quick. I'll just put our website.
Yep. Yeah, for sure, man. And then I see if any panelists, any other questions you guys have as we get to the end here. I'm reading through the chat.
I have a couple questions. Hi, Craig.
How are you?
I'm good. So I just wanted to clarify the fees because I did a lot of short sale processing too. And I think in this particular market, you have to know the VA guidelines, right? The entitlement being the biggest one, the matching. So what your fees are $1,500 split between agents, buyers, sellers, right? And then $100 basically for pre-qualification, whatever you want to call it. So
it's $1,500. Usually that's halved between parties, usually. Because we do believe we bring benefit to both sides. We do a lot more work for the buyer, but we're keeping the seller out of bad deals and getting them through it as fast as we can, right? But $50 per side is our fee at engagement. And, you know, truthfully, that's like when deals fall apart, that's not a major profit center for us. It's more of a cost.
I think it's amazing. Anybody should do it. Do not waste your time trying to navigate. But then I wanted to further clarify the servicer did the servicer have a fee? Is that a small fee? And then VA and FHA, did they have to do the VA funding fee again?
Just at 0.5% for VA funding fee, right?
Okay, and then is there in, yeah, go ahead.
A
Sorry.
regular VA funding fee, isn't it like, oh gosh, I'm trying to remember. It's like
I
two and a
think
half
it's a half a
percent or
percent.
something. It's more than 0.5%. It's much more. I know that. It's either 1.5 or 2.5%. But
In a regular,
in a regular new loan, and then that varies depending on how much time you've used it. But it's 0.5% in an assumption, unless there's a disability that's waived. As far as
Gotcha.
servicer processing fees, so they've been limited basically by non-allowables, right? And so that's why their charges have been about $300 on average for an assumption. They
Which is
went
nothing.
to,
It's like,
yeah,
that's
it's nothing.
nothing. Yeah.
They went to the VA, and I think the same thing has happened in FHA. And they said, look, we're overwhelmed. We need to staff up for doing this. We need to adjust what we're allowed to charge on this. And I do believe verbally VA issued an approval for up to 1,500, right? I don't know if that's been like enacted in force. I don't know how VA's rules become quote unquote law, right? But I know the VA is basically willing to do that, right? So I expect if you plan for 1,500, you're smart. But at the end of the day, even with those two, you're generally going to be quite a bit less in an assumption than you are in new financing.
Oh,
Right,
it's a no-brainer if you can get it done and all the pieces fit, because it is a
Yeah.
puzzle. There's a
It
lot
is.
that's got to fit. Cam, how many are you doing in San Diego? Like you're here local with me. I would imagine that the gap is much bigger in San Diego. And my thought to that was like, wow, every time, I've had the houses that I sold VA and the gap was, you're talking Temecula and it's 300 grand because they had a low payment. They bought a long time ago, right? A long time ago. So I was thinking, well, what if you marketed to more recent VA purchases and then for some reason they need to MEV or FHA? The gap wouldn't be as big if they were, using 100% financing and then bought more recently. Like to me in San Diego, that's the way to get it done, because if they bought even 3 years ago, the gap's going to be huge.
but the interest rate will be higher, and it's not going to be as sexy anymore, right? Because
Oh, yeah, you're right.
Sometimes
You're right. See, Sue,
we
it's all a
are-
puzzle. It's all a puzzle.
but we are seeing a pretty good amount. I mean, we're all helping clients who are getting new loans in this climate, right? I mean, so we are seeing people who are chasing those 2022 kind of mid to early 2022 houses that haven't
the rates,
appreciated
yeah.
a ton. The rates maybe are 4.5, 5, but the gaps oftentimes are, I mean,
Smaller.
basically they're enough to cover the fees of selling for the seller. Like the seller's just sort of trying to get out of the situation, right?
Yeah.
And so between the agent commission side and closing regular title fees and stuff like that, there might be netting almost nothing, but they're basically saying, okay, I'm out, right? And so there
Yeah.
are a significant number of people that are hunting those down.
Yeah,
All right,
that makes sense. You guys are amazing. I think what you're doing is amazing. Randy, thanks for bringing this again, because it's the new market.
yeah, totally. I'm all in on it. Craig knows what we're doing there with the group that I mentioned, but we're on top of the hour, past the top of the hour. But Craig, thank you so much, man, for joining us. We were actually in competition today, because usually we have 50 people on, but we're the CEO of EXP actually did a session on the settlement, NAR settlement, their third session, literally at the same exact time I saw that announcement yesterday. I was like, no, why today? But
I get it. If you want me on again, I'm happy to come. But at assumptionsolutions.com, we have a real estate agents tab. Under that tab, I actually have a full recorded class as well that kind of covers a little more depth. Obviously you have a recording on going through this as well, and we're always doing classes. I will say, if you ever want to go back to your brokerage or your firm, I do Zoom classes directly for brokerages as well. I try to do as many as those as I can, because once again, I'm just here to help the market grow. So,
Yeah, we'll get you back, because like we said, this is evolving, so maybe 3 months from now, you can come with the new things, right?
okay.
The new improvements. So anyway, thanks again. Thanks for everybody for coming, and see you guys next week at the top producer panel. Later.
Okay.
Thank you, bye.
All right.
Bye,
Thanks a
Craig.
bunch. Bye-bye.